The legislation, which would enact the biggest U.S. tax code overhaul in more than 3 decades, heads to President Donald Trump for signing, although the timing was unclear. The U.S. House of Representatives voted for a second time to pass the sweeping bill Wednesday afternoon, hours after the Senate approved it. The bill will slash the corporate income tax rate to 21% from 35%, which analysts say will boost business earnings and lead to higher dividends and stock buybacks. U.S. stocks rallied in the days ahead of voting on the bill, introduced 6 weeks ago, but some investors have begun to sell. The Dow Jones Industrial Average fell 28.1 points, or 0.11%, to end at 24,726.65. The S&P 500 lost 2.22 points, or 0.08%, to 2679.25, and the Nasdaq Composite dropped 2.89 points, or 0.04%, to 6960.96. MSCI's gauge of stocks across the globe shed 0.06%. European stock markets fell 0.7%, with blue-chip indexes in Berlin, Paris and London 0.3 to 1.1% lower. The pan-European FTSE Eurofirst 300 index also lost 0.70%. Japanese stocks inched up slightly as strength in financials offset a sustained sell-off in construction shares. The Nikkei share average edged up 0.1% to 22,891.72 after trading in the red. Government bond yields, which move inversely to their prices, have jumped in the United States and Europe on expectations tax reform would help boost economic growth and inflation. U.S. Treasury yields rose to 9-month highs as the bill passed. Benchmark 10-year U.S. Treasury notes were last down 10/32 in price to yield 2.497%, from 2.463% late Tuesday. The 30-year bond was last down 1-3/32 to yield 2.8767%, from 2.823%. Eurozone government bonds sold off sharply for a second straight day. The US dollar slid against most currencies except the Japanese yen on expectations the tax bill's upside impact on the greenback had been factored into the market. Gains in the